Audio recording for this meeting has begun.
Good afternoon, everyone. Thank you for joining us for today's webinar, CRA in Rural America, Part 2, Successful Uses. My name is Dan Stern, and I will be the moderator and host for today's call. If you have not already done so, please ensure that you have access to both the audio and video portion of the webinar. To access the PowerPoint for today's call, please follow the link on your meeting confirmation email. All participants are in listen-only mode, which means that your line is muted. However, we are very interested in your questions and feedback. To submit a question, please use the Q&A box that will appear on the lower right-hand side of your screen. As you just heard, today's webinar is being recorded. Both the recording and the presentation will be available on HAC's website, which is www.ruralhome.org, after the presentation is completed. I see a lot of familiar names in the attendee list today, but for those of you who are not familiar with the Housing Assistance Council, HAC is a national nonprofit organization based in Washington, D.C. that assists local organizations with the building of affordable homes in rural America. With a mission to improve housing conditions for the rural poor, HAC places an emphasis on striving to serve the poorest of the poor in the most rural places. HAC emphasizes local solutions, empowerment of the poor, reduced dependence, and self-help strategies. HAC assists with the development of both single and multi-family homes and promotes homeownership for working, low-income rural families through a self-help sweat equity construction method. If you're interested in learning more about HAC services or products, you can reach out to an office near you. If you have any questions or require assistance, please contact the nearest regional HAC office. And also, please mark your calendar and join us for the following trainings, which we'll see on your screen. We have several upcoming webinars, including the third in this series on CRA, and a few place-based trainings, including a symposium on serving America's aging veterans. And mark your calendars for the HAC 2016 Rural Housing Conference, which is coming up November 29th to December 2nd in Washington, D.C. And so thank you for joining us for today's webinar, CRA in Rural America Part 2, Successful Uses. And I'd like to welcome and introduce our speakers for today's webinar, Keith Wiley and Jane Irish. Keith is a senior research associate here at the Housing Assistance Council and works extensively with many data sets in an effort to better understand where, when, and how development patterns occur. As part of these efforts, Keith has authored a recent article in the Journal of Housing Policy Debate entitled "The Role of the CDBG Program in Rural America," as well as written several reports analyzing rural lending activities. He also co-authored both a book chapter in the Oxford Handbook of Urban Economics and Planning and a Resources for the Future discussion paper exploring residential infill. And our guest practitioner is Jane Irish. Jane is the Director of Development for Genesis Community Loan Fund. Previously, she was Director of Campaign at United Way of Midcoast Maine, which is in Bath. In addition to her passion for creating stronger communities, she has an extensive background in sales and marketing in the for-profit sector. Jane has served on the Georgetown Financial Advisory Committee, the Southern Midcoast Maine Chamber of Commerce Board, and the Membership Development Committee of Kennebec Estuary Land Trust, and is a corporator of Bath Savings Institutions. So, at this point, I'm going to turn the webinar over to Keith, and I'll let him get started. But just a quick reminder before we wrap up, the recording and all the materials will be available on HAC's website. So please also be on the lookout for an email containing the link to your certificate of participation, as well as a link to a follow-up survey on the webinar. I'd like to thank Keith and Jane for the wealth of information provided during today's webinar, and thanks to each of you again for joining us today. So Keith, it's all yours.
Yes, thanks, Dan. Appreciate the introduction, and I just want to say thanks everybody for being here today. And this is the second of three webinars, as Dan was saying. The first, we looked just a little bit at a brief background of the CRA and touched on how, in fact, it does impact rural lenders. And this webinar is going to look at specific cases of where the lenders earn CRA credit for our community development projects in rural communities. And I think it's like an applied approach here and we did a case study and a report that will be available on our website that details how these cases we're going to talk about today. Now, before we talk about it, I want to turn this over to Dan. We're going to have a poll question just to get everybody's familiarity with the CRA and this subject.
So as you can see, the question is, how familiar are you with lender community development / investment efforts, specifically those related to earning CRA credit? So we're seeing the answers coming in. We'll leave this up for a little bit. Hang on a second. Make sure you all see what I see. So we have a pretty widespread range, various levels of familiarity. So Keith, that gives you a lot to go on. I'll leave this up for another few seconds to see if any stragglers come in. All right, we seem to be winding down. So thank you all. Keith, does that information help you? You can get started.
Yes, no, it's good to see people are familiar with it. I think sometimes, especially in a rural context, people aren't aware of the CRA or really of CRA related products. I actually wasn't until a few years ago when I started doing more research on the topic. And I just have a slide here that before we present, just to give you an outline on how the presentation will go, the webinar. First, I'm just going to talk a little bit about CRA related community development in rural areas, and really what I'm talking about is projects where a lender got, for their involvement in it, they earned CRA credit that occurred in a rural area. And I'm going to talk a little bit about how there may not be as many of those projects. It may be a little rarer than what you might expect. But we were able to, in this report, highlight cases where it does occur, and I think that's important to show examples because you don't hear much about it. And I'll go over some important factors that we found across these 4 projects we looked at, and then we'll go into depth with Jane Irish on the Coastal Kids Preschool project, which is a great project, and she can give us let us know more about the project and the specifics. Now, when we first started this project, we were calling around and trying to find out about rural projects. We were pretty much uniformly, people said that there weren't a whole lot, that most CRA community development efforts were done in suburban and urban areas. And unfortunately, there's not a lot of data from which to specifically study this. But I think they're correct that there aren't many projects, and I think there's primarily 2 reasons why it's probably limited, and one would be that most of the banks that have a majority of their service or assessment area as rural are small asset lenders, and they are not subject to the community development or investment test when their CRA examination is performed. So in other words, the banks that predominantly serve those areas, the majority of their service area is rural, they're not tested on whether they do those activities. And I think that and also their size may limit the amount of community development work that they are able to do. And the second part of that is the lenders who actually are evaluated on their community development investments, the larger asset lenders, oftentimes the majority of their service areas are in metropolitan, suburban, and urban locations. And I pulled this quote from Thomas Curry 2 years ago, and I think it does a good job for the lenders who are examined on this area and their involvement in the community. What may be going on is, in light of the uncertainties, some observers noted that banks tended to take the safe route and concentrate their community development activities where CRA considerations would be assured. In many cases, that will leave CRA activities concentrated in metropolitan areas where banks' assessment areas are located. And I think this is occurring, and this, combined with the fact that most of the rural banks are small, may explain partially why there's limited rural activity. And now I have one more slide here, and even though you can't really get at the volume of community development, like there's no data, publicly available data set for all the lenders you can download and locate and say where they occurred. We looked at you can look at the assessment area, and what we did was by bank size, small, intermediate, and large, I took the median and the mean service area population, assessment area population that was rural, and you can see for small banks, over 50% on average of the assessment area was rural, and that's to be expected because most of those banks are in rural communities. But those again are the banks that don't have to do the community development or investment activity. But then when you go down to intermediate and then you go to large, you see it gets much smaller. The median rural population in the large bank assessment area is only 2.5%. And so I think this kind of highlights what maybe is the reason for the limited amount of rural activity. And I know there's been talk, like at the OCC and stuff, there's been efforts to increase that activity. But we were, even though there may not be as many projects as we might like, or as one might like, there were projects we were able to find. And in our study, we had 4 that we highlighted I think are great projects. There was a project in Fort Morgan, Colorado, one in Buffalo, Minnesota, one in Terry, Mississippi, and one in Damariscotta, Maine. And I think the reason why I like to show this map is we got a geographically diverse area covered. And I think that was nice. We were hoping to be able to do that. And then on next, we show that the projects actually, this is a few details. The projects themselves were diverse in nature, what they did. The Damariscotta project, which Jane will be talking about, was a preschool expansion. The Fort Morgan project was farm worker housing. The Buffalo, Minnesota project was low and moderate income housing units. And the Terry, Mississippi project involved a bank branch donation. And you can see there's different kind of organizations. The Genesis Community Loan Fund is a CDFI, but then the Podolitz, I'm probably pronouncing that wrong, sorry about that, but the corporation was a private development corporation. So there's some variation there. And also the lenders, most of them were large, but the Bath Savings Institution is actually an intermediate large. So I think the cases we chose, they cover a good variety of what could occur. And when we looked at them, we found some common elements that I think are important to highlight across the programs that I think made them a success and could help with future CRA projects in other areas and other groups. And one was we found the relationship between the local organizations and the banks matter. When we talked to people, they said that they had had a long-standing relationship with many of the banks, the nonprofits or the CDFIs did. And they mentioned things like state housing conventions and previous working experience with them where they interacted on a regular basis between the banks and the organizations, and so they knew each other. So if a bank was looking to do activities, maybe they needed some CRA credit activities, or they wanted to do some projects like that, wanted to provide loans or assistance where they could get credit, they knew who to go see. And similarly with the organizations, they had worked with such and such, and they knew if they had a project, they could approach them. And I think one good example that also is related to this is one of the projects, the group was located near Denver, although the project was in Fort Morgan, it's a more rural area. They actually, since they were in Denver, they were next to the regional bank branch, and they had a close working relationship and knew the bank branch, so they knew who to go to, whereas if they were in a more isolated location, it might have been harder, and it would have been a branch office, but here they had the regional office, and they had that contact and that relationship that helped them. Also, the bank's understanding of community lending, the bank staff. Several times, for a couple of the projects, we were told, you could have a CRA compliance officer who kind of dots the I's and crosses the T's and does all that, and that's important. But also it was important to have somebody there that had actually done the lending, that understood the lending, that understood the different parties and how these projects had to come together. Because if you wanted to actually actively seek out such projects, it was better if you had somebody with a complete understanding of how they worked. And the third one was the knowledge of different funding streams. And I think this is really important. The CRA part of these projects in most cases was kind of small, right? It was important and it was critical, but it might be like a construction loan to a larger project. And they said the parties involved needed to understand the different funding streams because things could come up and things could change, and it was important that they did to make the projects work. And part of that funding stream would be the CRA, where the lender would earn credit, and that would help them and play the critical role. But just to highlight one of them, one of the projects, several of the projects had USDA rural development loans and grants. One of the projects used NSP money for the purchase of the land. In some cases, local governments were involved. Low-income housing tax credits were involved, and so in these projects, these many different streams, the CRA is part of it, and it's important that everybody kind of understands that and can work with these issues that may come up. And then the last one, it's really hard to measure, but bank philosophy. It was said throughout that, like, I would ask people, and they would say, well, banks are different, and you just don't know. Like, I mean, some banks actively seek it out more than others. And the CRA itself, it is an enhancement or an encouragement for lenders to do it because you can get a good rating, and that can help you. And also, it looks, it's good for the bank, good promotional. But maybe more important is that the bank actively values those kind of activities. And like the Bremer Bank, in that case, it's owned by a foundation. So that foundation really values those activities. Sorry about that. And we found that that was the case with many of them. If the bank took an active, like it was like a top-down, they'd say that it really mattered to them, that they could seek that out, that it was important. Now, I'm going to hand this over to Jane, ask her just a few questions, because I think it's important that her story is a great story, and it adds a different perspective, because she was actually there and worked with the project. And is the Coastal Kids Preschool Project in rural Maine. And Jane Irish from the Genesis Community Loan Fund. And I'd just like to ask Jane if she could just talk a little bit about her group and then a little bit about the preschool project and just a description of what it was and what was involved.
Great. Well, thank you, Keith and Dan, for having me on the call and highlighting one of our projects. As Keith said, the Genesis Community Loan Fund is a CDFI. We serve the state of Maine, and we serve it statewide with a mission to provide technical assistance and lending for affordable housing and community facilities. Maine is a largely rural state, which creates both challenges and opportunities for us in terms of partnership funding and opportunities to develop these community facilities as well as affordable housing in rural and some urban areas. We have a history of collaborating with banks in Maine and other funders, and we view our role as a partner who is the partner that's going to make the project happen. We view our role as what can we do to make this project happen, and I think Coastal Kids is a great example of that type of partnership. Often our role will be technical assistance, being part of a financial package with banks, both locally owned Maine banks and some of the larger banks that are in our state. And we'll often take additional risk that a bank will not take, such as subordinate positions or alternative collateral. We started working with Coastal Kids quite some time ago. They're a preschool that's based in Damariscotta in Lincoln County, which is a coastal county of Maine, and it's quite rural. It was developed because they discovered that about half of the kids in that county were going to school and they weren't ready to start school, so they felt that they needed to have some kind of preschool program. Almost half of those kids didn't have access to a program like Coastal Kids, so it was developed, and it started in Lincoln County, and it was based in Damariscotta, and they did very, very well. As they continued on their path, they began to grow and saw an increased need, which led them to come to two conclusions. One is that they'd like to reach out to the neighboring county, which was Knox County, because they saw that there was a great need in Knox. It's a very rural, very poor and underserved county in Maine. And they also discovered that to do that, their existing facility was inadequate. So we stepped in and we provided them technical assistance initially to help them figure out what it is they needed to do. Did they need to buy a new building? Could they rehab the existing building? What would it cost? How would they plan that out? And our technical assistance piece in that resulted in the plan to build a new facility. We then worked with them to create a successful application to USDA Rural Development to get a loan from them, which started off the project, the expansion. We provided gap financing for them during the construction phase and helped them raise money that they needed to raise to continue the construction and complete the project. All this was happening in the late, like 2008, 2009, when the economy was really bad up here as well as nationwide. And as they got to the closer to the conclusion of the project, the original bank that had agreed to partner with us pulled out and said that they could no longer provide the financing that Coastal Kids needed to go forward and finish the project. At that time, both Coastal Kids and the Genesis Fund reached out to Bass Savings. We've had a long-standing relationship with Bass Savings. They have partnered with us in several loans. They have a really strong sense, as Keith spoke about, a really strong philosophy about community and how important community is for not only the bank's well-being, but the greater good, and have a history of doing this type of project. John Marsh was originally supposed to be on the call today, and he was the lender that was involved. And if you know Maine at all, you know that he and Bass Savings have been at the top of the list as far as CRA work in Maine for quite some time. We're very fortunate in Maine. We have a good base of local community banks who really support community activities, and many of them have really participated to an exceptional level. So they came in. We put together a financing package that included some unusual activities on our behalf. We took alternative collateral. We took a subordinate position. We felt like this was a really important project that we wanted to see happen. Bass Savings, as the lender, felt the same way, and we worked out a way to make that project happen, even though it wasn't conventional. I think that's one of the things that's so important in this whole process are the partnerships. And in Maine, anyway, it takes a lot of different partners to make these things work, and everybody has to give and take.
No, thanks. That's fabulous, Jane. That's yeah. No, it was Mr. Marsh is great talking to him, and your project is great. And for a small rural community, I grew up in a rural community because I know that's really a valuable resource. And Jane, what's your thoughts on like the CRA and its role in like encouraging rural projects in general, and like this project and just in general, because I know you've worked on other projects.
I think there are two challenges.
That are similar.
I think you've picked up on them earlier. One challenge is that of risk, right? I mean, particularly with the Coastal Kids project, no commercial bank was going to be able to give them the kind of loan package that they needed to complete that project because of the risk. So that's an issue for them. We found that if we can partner with banks, we often can mitigate that risk for them, and we can both move forward with a lending package that allows them to have the CRA credit and allows them to have the loan. allows them to have a performing loan. The other issue I think that we see often in rural areas is that of scale. For example, this project, when it started, was serving 36 kids. Since it's been completed and the school's doing very well, it's now serving, 55 to 60 kids. Not a huge amount if you're looking at what you can get in an urban area, but truly transformative in rural areas. It really changed, for the better, the population of these two very rural counties.
Yes, no, I mean, the services like that made available that otherwise wouldn't be, uh, for sure. In do you think, Jane, just thoughts on how the CRA might more effectively be used to help with rural investment efforts and development projects? You have any thoughts maybe about ways you think there might be ways to make it more effective or
Yeah,
reach
what
more
I
rural
see the biggest
communities?
challenge is like getting banks to understand that it is available and how it works, and that there are partners out there that can work with them so that they can get the CRA. Oftentimes we talk a lot with our community banks and also some of the larger banks that are based in Maine, and they don't know. It's just a question of not knowing, or they also may not have access to those deals unless we bring it to them, because some of them are so rural. And I think people don't know where to start. And oftentimes they'll start with us, and we'll take them to the bank, right, as a part, and put together a partnered loan product for them, including a commercial bank and a CDFI.
Yeah, I think the CDFIs play a critical role in this. I think a lot of these projects.
I think we
You
do.
guys play
Both from a technical assistance perspective, where we're nurturing that nonprofit to become what they need to be credit worthy, to have a loan from a commercial bank, to have the correct organizational structure, whatever it is. And as I said earlier, we view our role, and I think most CDFIs do, as the entity that needs to make it happen. We're about community development, so how do we make that happen, and who do we partner with? And we're looking around and we're trying to partner with everybody that we can, with the end result being, that we're creating affordable housing, or we're creating a community facility like Coastal Kids.
Yes, thanks, Jane. That's, I mean, it's like I said, it's a fabulous project. But a lot of times I deal with mainly data, and it's kind of, I can't really see how it works. But then when I see a project like this, or the picture with the children hear a story like this, it's and you can see actually how programs like the CRA can make a big difference.
I think the thing it's the untangible that's difficult, right? I mean, you said earlier about bank philosophy, and that's true of a lot of main banks, that they have that philosophy, and they understand that community development helps everybody. Everybody comes to the top if the community's better. If these kids have the right start and they go to preschool and then they're able to go to school and they're able to do well in school, it has a long-term effect that carries forward for generations. And it's good for not only that community, but it's good for the state.
Yeah, it's a true win-win situation.
The other thing that we do in terms of CRA with banks, and other CDFIs do as well, is that we often partner with them in terms of them providing us loan capital, and it's called an investment loan. So they will, actually give us a loan, and we will pay them interest on that, and it goes into our permanent capital pool, and they receive CRA credit for that. So that's another way that we work with our local banks to get that kind of capital into the communities. And once we have that kind of relationship, it's a little bit easier to then go and say, we have this project like Coastal Kids, and and this is what happened. We lost a lender, and what do you think? Can you help us?
Yeah, it almost throughout this we found that out that it seemed like when people work together, like you said, and had a strong relationship, a strong partnership, it's not like adversarial. It's like how can we come together? It helps both of us and the community as well. Okay, I want to say if we could maybe the information. I'm going to give you a little bit of information here, but we can open it up for questions too. I just want to say before we do that, just that there's our report. You can find the report. It should be on our website where we talk about these 4 case studies. And like I said, it was a good report. It was fun to do, and I think it provides some examples that oftentimes you may not hear about of projects in rural areas. And also want to mention we have our third and final webinar on the 13th, where we're going to talk about outstanding lenders, and we're going to talk about maybe efforts to increase rural activity, such as we're talking about today. And I always got to put on here the Federal Financial Institutions Examination Council website, because a lot of information about the CRA you can get at through there. If you want to check out your local lender, or you want to see what their latest CRA exam is, or you want to see what the upcoming CRA schedules are, you can go on there and it'll link you to the other resources, and it's a really valuable resource and a good way to find out about a lot of this, because sometimes like Jane was saying, sometimes like people just don't really understand or know a lot about the CRA, or as we said in the earlier webinar, they don't think it really applies to rural areas, which it does, and lenders that serve them. And if we
Keith,
could open it up now.
before you move on,
Go ahead.
just to make people aware, on the right-hand side of your screen, you should see a box that says resources underneath it. It has links to Coastal Kids Preschool's website. Hack had a general report on CRA in rural America, and the bottom link is a link to that report Keith is talking about, making CRA work in rural America. That all of that is available on our website currently, or on the Coastal Kids Preschool website, but you can also get to it right now in real time.
Yes, thanks, Dan. Thanks for pointing that out, and also I want to thank Jane again, for your help. It was a real pleasure.
A great project, and we were happy.
So Keith, you wanted to open it up for questions? We'll
Yes, questions. We will take questions now.
we have one question from Ruth Matz at Community Action in North Bay, California, and is where can one access a list of CDFIs in the state of California?
Actually, CDFIs are members.
Now, before you guys get too far, go ahead, Jane. Sorry.
CDFIs are members of an organization called the Opportunity Finance Network, OFN. And if you look at ofn.org, they have a map that will show you CDFIs in your area.
All right. And
thanks, Jane.
I just posted that question and the link to that map in the Q&A pod, so that is available right now for everyone to use. Thank you, Ruth, for that question. Another question that why are large lenders the only institutions that are subject to all 3 CRA tests? The lender, the services, and the community investment for CRA credit.
Well, I think the main reason why it's kind of tiered based on lender assets, and I think the idea behind it is that small lenders, that would be maybe the idea is it would be too much of a burden on them to require them to do that type of activity. It's always a fine balancing act. So in other words, if you're a real small asset lender, that might be too big a burden. I think that's really what that's good. It's tiered. So then there's the intermediate, and they have to do one step more, and then there's the large lenders, and they have to do all 3 tests: the that includes the community investment and they need community investment and community development activities. But I do want to point out that small lenders can actually do community development and they can get credit. And they can make that known to the regulator, and that can give them a better rating. But they're not specifically rated on it. So in other words, if they do a project like Coastal Kids, they could tell the evaluator when the CRA exam was going on, and they would receive credit for that, and it might give them a better rating overall. And I know if you look on the internet, you'll see a lot of lenders post their rating, especially a good rating if you get an outstanding rating. So it can, I think it's it can be a positive even if you're not specifically, they don't specifically look at that activity.
Excellent. Okay. One other question that popped out to me as we were going along is you listed a few of the reasons why the projects you studied were successful, but were there any other important components of why those projects worked so well?
Yeah, there was, I think it was a big part. I think maybe some people get the wrong idea that these projects they're not sound projects. And throughout this, through each one of these cases, when we talk to people, they stress that these are, these aren't losses for the lender. These are sound projects, and they're put together. They're put together, and they're well thought out, and they're good investments. And I think that we had a line, and I do think it's a great line. That one gentleman, I think it was from the Bremer Bank case, said that the CRA, was an enhancement that it didn't make a bad project good, but it would make a good project better. And so I think that was really important, that people need to, like, these projects are good investments, and they're CDFIs and the stuff, when they work and they put them all together, they are things that the banks would be interested in. And I think there's the wrong impression that maybe they aren't, but the ones we studied were, and everybody said that they were sound investments. So I think that's important to understand. And that was what they said basically whenever we'd ask people that, they're like, well, we wouldn't have done this project if we didn't feel that it was, wasn't a sound, good investment.
Right. Okay, we have Ruth Matz has another question, which is, what are the consequences for a bank that does not meet the 3 tests?
Well, when you're rated, when you get your CRA rating, it's dependent on your size, which test you're subject to. But if you get a poor rating, there are 4 ratings, and if you get a poor rating, there's outstanding, satisfactory, needs to improve, and substantial non-compliance. And if you get a needs to improve and a substantial non-compliance, that's overall rating. Then what happens if that lender then goes to open up a new branch, or if they apply to the regulator to acquire another institution or something like that, that rating can be used against them. In other words, there's no financial penalty directly, but if you got that on your record and then you apply to your regulator for something like you want to acquire another institution, and you have a substantially non-compliance rating, it will hurt you, and they could use that against you for denying your application. So that's ultimately what happens, because each bank is evaluated at the CRA according to whatever, it's small or large, and they are subject, or intermediate, and they're subject to whatever tests or they have to go under for that exam. But then at the end they get a rating, and you can find that rating on the FFIEC website. And like I said, that's really the incentive, is that you wouldn't want that rating if you're a lender, because when you apply to the regulator for something, it could be used against you. So, and also if you get a poor rating, you're more likely to be evaluated more often. So normally you'd be evaluated CRA maybe every 2 to 5 years if you're passing, but if you're getting failing grades, you might be examined more often, more regularly.
Excellent. Thank you, Keith. And Ruth also has a question. I believe this is probably for Jane, but Keith may be able to help as well. But did the preschool project use a Choto, a community housing development organization?
They did not.
Exactly. Okay. That's as straightforward as we can get. So I don't see any other questions coming in. I will give everyone another 10 seconds or so, but
That is one thing I could say to attest is during this, and Jane could attest to it way more. She knows more about this than me, but I was surprised that these projects are really complex, and there's so many moving parts to them. And the CRA was critical, but it was just one part, the loan, and that was interesting.
Right. I think that, yeah, I think that's true, and I think that speaks to us being a CDFI and being involved in it, and making the bank perhaps feel a little bit more comfortable, because we do, our technical assistance does support the organization in a way that is helpful to the organization and to the bank as well.
and we did have one more question come in from Jim Nordland at USDA Rural Development, and he has besides the CRA rating, doesn't the Department of Justice get involved if redlining is an issue?
Well, yeah, I would, yeah, if you were doing discriminatory practice, yeah, and that's a good point. Really, the CRA was, when it was established in 1977, was an effort to stop that redlining, where lenders wouldn't loan to certain neighborhoods or communities based on the racial or income makeup of the community, and it was related to a practice where they had maps, and they would draw lines in red areas they would not be lending in, and yes, I mean, I would think, I mean, that's different. I would think that would be different. I'm not absolutely certain, but I would think that would be different than like if regulator thought you were doing that, I would suspect it. I don't know exactly what would happen, but I mean, yeah, that I'm sure there would be some consequence. I don't know, because that would probably be worse than a bad rating. I mean, that would, I mean, I can't fully answer that, but I would think yes, something. If it was shown that you were doing discriminatory, they could show that you were doing discriminatory practices or refusing to lend to certain communities.
All right. Well, since there are no other questions coming in, and thank you, Keith, for addressing that last one, I think it's time to wrap up. So just a quick reminder before we finish here is that, as I said before, the recording and all the materials will be available on HAC's website, and be on the lookout for an email with a link to both your certificate of participation and a follow-up survey, so we can sort of gauge how we did in this webinar. Again, I'd like to thank Keith and Jane for the wealth of information they provided today during this webinar, and thank each of you again for joining us today. Please enjoy the rest of your afternoon. Goodbye.